There's a lot going on in the stock market, but there's just as much happening in the world of ETFs. From non-transparent funds to artificial intelligence, the space is constantly changing. And who better to check in with all this than Robert Tull? He's president of Procure, AM, and a stalwart in the ETF industry for decades. He's created over 400 ETFs in 18 different countries. I've known him a long time. His latest venture looks at new ways to combine big data, artificial intelligence, and machine learning in the ETF space. I know that's a lot, but he's going to explain it. So, Bob, explain this to us. Active management has been out there for a long time and underperforming.
Underperforming. They haven't found a solution yet. And I think the technology that I've run into is going to help the marketplace do that.
You believe using big data as raw material and combining it with machine learning can build ETF portfolios that outperform active management, even active managed ETFs?
Yeah, I do, and I'll tell you why. Because when you look at the key to this new technology, it's ensemble analytics. Turing Technology has been really working on this for several years now, and what happens is you're going to be taking a technology that's based on predicting outperformance. The technology's been around for years. It's just never been moved into the asset management space. So getting data collected, running permutations against it to figure out which is the best, right? And then really focusing on the best of the best selection that's diversified. Picking a concentrated bet is not going to be what an ETF is doing.
This is all very high-level stuff. I want to try to give us an example. So we have an ETF out there we've talked about before. Goldman Sachs has an active beta large cap ETF. And this has done well against the S&P 500 this year. They picked several different factors, including earnings and momentum, and weight them. Now, you think adding big data analytics and machine learning to this, you can pick stocks that outperform this using this as your benchmark.
Well,
explain how you're doing that.
I don't pick the stocks. What we're doing is we're using all the data from all of the smart beta ETFs, and we're trying to build the smartest of all the smart beta ETFs using this technology.
So you look at all the other ETFs that are out there that are picking stocks against this one, and you pick their best ideas and then overlay it against this, and you think you can get out performance.
And overlay it against the right diversification models.
All right, Dave.
Yeah, so
weigh in here. We've talked about AI. We talked about AIEQ before.
Right, the Equibot
picking
fund,
stocks, the Equibot funds. We're very interested. I love the idea of machine learning and AI picking stocks. Is there evidence that it can actually outperform?
Oh, absolutely. Right. I mean, unsurprisingly, I think Bob is right at the cutting edge, and this is the next generation of, frankly, financial product development. Right. Machine learning sounds big and scary, but all it is really just taking data and things you already know, how things perform, to generate rules, as opposed to hiring a bunch of CFAs to come up with those rules about what you're going to buy and sell based on fundamentals. AIEQ has done quite well performance-wise. It's shown that this can happen. I sort of see that as the 1.0 of this type of strategy. Hedge funds up and down the Connecticut coast are using this, and I think Bob's ideas are going to be the next generation of ETFs.
I love the high-level thinking here, but let me just go back to the Goldman Sachs ETF. Their largest holdings are Microsoft, Apple, Amazon, Facebook, Johnson & Johnson. When you overlay yours, do you get similar weightings? And I want to emphasize, you can't buy this yet, but you're developing programs around these.
Yeah, this is a technology. This is not an asset. It's a tool, just like ETFs are.
So here you see what we've got here.
Right.
This is the Goldman Sachs ETF that we've talked about many times here before. This is a GSLC. You overlay it. When you have your heaviest concentration, what stocks do you own?
Taking these 5 stocks alone, right? And we've eliminated 3 of them already. We've eliminated Microsoft, we've eliminated Apple, and we've eliminated Johnson & Johnson through the mathematics, not through a decision-making process. And and Amazon and Facebook are over 5% weighted each.
And can you explain what the machine is thinking? I know there are algorithms that are following, but one of the things you have to do is explain what the thinking is here.
The thinking is that if you take the collective wisdom of not only Goldman Sachs, right, the smartest guys on the street, but also all of the other smart beta ETFs, right, you're going to get the mindset of somebody that's greater than any specific investment philosophy or investment selection, and you're going to add the data to it that you're probably missing from quite frankly, that a human brain just can't digest.
John, does this make sense to you? Does it make sense? It intuitively sounds right that the collective wisdom of everybody can be better than the wisdom of an individual set of stock pickers, even if they're using a rules-based system as at Goldman Sachs. Is there any flaw to this thinking? What could go wrong here?
I don't understand it, so I'm a little bit suspect of it. I think, I'd want to dig into the research before I actually have, a view on it per se, but it's one of these things where if you don't understand it in the first 30 seconds, a minute, then it's kind of hard for me to comprehend it.
Yeah.
So
but do you believe...
I like the idea of systematic, rules-based investing using a lot of data. I just don't understand how this one is put together.
Before we let you go, how are you selling this to the ETF community? What's going to happen from here?
The answer is, it's just, I hate to say it, but it's in the same period as where ETFs were in the early 90s, where people didn't really believe ETFs were really of value to investors. And I think that this is where we are now. We've got to prove to people by running these things live and in production.
A year from now, do you think you'll have ETFs that will do this, that will match?
I would hope that people license it. I can tell you that there are multiple insurance companies that have done their due diligence test who are signing up. We have derivatives desk who are signing up. So yeah, I think they convinced me, as well as the data has convinced me, that this is the future.